Hey, what's up? It's Stephen Williams with thecreditrepairshop.com, and in today's video, what we're going to talk about is like there's a massive dump of debt into the market. I know I've said that before, but when you see the numbers, when you hear the numbers, and I got them all sitting here, these are all got 3 pages of debt where these are being released. These are charge-offs that are being released to debt buyers so they can buy them and they can start going after people for money. And one of the first ones I see right here, and here, let me quickly tell you what we're going to talk about at the end of the video so you can know because we don't just talk about what's happening, we talk about the solutions of what you can do about debt if you end up getting a letter where they're stating that you owe money. So we're going to talk about garnishment law, what you could do if they attempt to garnish you for debt. We're going to talk about statute of limitations. We're going to talk about 1099-C debt forgiveness. We're going to talk about debt validation. We're going to talk about debt settlement. We're going to talk about straight up hardship situations that you might qualify for. So the first thing, let's get right into it. We got this looks like it's a bank, and over $3.3 million of bad debt. Average account balance is around $2,000. And looks like that they're actually trying to sell this debt off for 1 penny on the dollar. 1 penny on the dollar. So you can see that there's a lot of money that these companies are making. And that's probably debt that is past statute of limitations. That would be the only reason why I could see a debt company buying that debt at that price. So let's go down the list. We got mixed credit cards, $14.4 million. We got payday loans, $794,000. We got some more retail debt. Those when people come into the store and they're trying to get you to sign up for to get a credit card at their store, and you get a percentage off. Well, a lot of people are defaulting on those. We got $22.7 million worth of those cards, another $30 million worth of those cards, and another $24 million worth of those cards. Then we got some auto loans. Must be a small credit union, $1.7 million. More mixed retail, $2.7 million, $2.9 million. And that's those when they try to get you to get the credit cards at like Target or Nordstrom's, even Walmart. I think they even try to do it now, where they try to get you to get their credit cards, Kohl's, all those places, and they try to get you to get them because they know that it's going to take you a long time to pay off what you just purchased, so they can turn a $200 purchase into a $500 sale because they're going to make all that interest in the middle. People rarely pay off their credit cards, and so that's why they're doing that, because they know that even for the people that go bad with what we're seeing here, the people that do pay, they pay for the people that go bad. So that's their business. That's their business model for doing that. That's why they're pushing their reps, their cashiers, to push those cards out on people because it's very lucrative to them. So here goes some payday loans. A small one, $18,000. Some more department store cards, $2.3 million, $2.9 million, $1.3 million, $1.2 million. Some more payday loans, $700,000, $1.2 million, $1.4 million. More mixed credit cards, $8.3 million. The bigger credit cards, Visa, MasterCard, the bigger credit card companies, well, they're through the banks, but these are the Visa, MasterCard, $59 million. Here go auto loan, $490,000, must be a smaller lender. Here is mixed credit card, $16.7 million. This one is payday loans, $267,000. We got more mixed credit cards. Boy, this is like a big file with mixed credit cards. We have, let's just go down them. 1.8 million, 16 million. More payday loans, 242,000, 256,000. More department store credit cards, 24 million, $85 million, $85 million worth of bad loans of department store cards. $85 million. That's a lot of cards. And we got bad checks, 294,000. Let's continue here. This is payday loans, 488,000. We got some auto loans, 1.4 million. Mixed credit cards again with the department stores, $27 million worth. Payday loans, 973,000. Payday loans, 36,000. Payday loans, 31,000. Payday loans, 885,000. Mixed retail credit cards again, 2.5 million, 8.4 million, 7.8 million. Payday loans, 58,000. More department store credit cards, 28 million. Auto loans, 8,900,000. More credit cards, 26 million. Small banks must have small credit cards, 516,000. Payday loans, this is that big national company, I won't mention their name, 2.9 million, 1.4 million. College, online college, 115,000. More mixed credit cards, 5.4 million, 71 million, 62 million, 58 million, and 5 million and 27.9 million. Auto loans, 406,000. Education, online educational programs, college, online college, 1.58 million. Online shopping network, 497,000. And to end it all off is auto loans, $1.99 million, $1,999,000 in auto loans. So you can see that there's a lot of debt in the market. And one of the things that I look at when I see this is it's like I can kind of have a gauge on how the economy is going, and to see that there's a lot of defaults on certain types of financial products that are available. But one thing that I do see with these is that a lot of these were from '08. We got some '09, 2010, where they just blew it all out there. And a lot of this stuff is past statute of limitations. So the first thing we're going to talk about is when you get any of these letters from debt collectors, is that the first thing you need to do is to make sure it's not past statute of limitations. Now, this is some key points about statute of limitations that you need to know regardless of what state you're in. And then each state has their own laws when it comes to contract law for statute of limitations on a contract. The first thing that is just point blank, probably blanketed with every state, is that if they have contacted you and you've made a payment, regardless of how long ago the debt is, it restarts the time clock on the debt. So be very careful of a debt collector calling you and they're saying that they're going to do all of these things to you. If you don't make a payment, make you lose your job or whatever, you need to make it. You need to make sure that you do not do anything that can reauthorize the debt to start the clock over. These are the things that can be done to restart the debt over, is making a payment for $1. Because then they can reset it on your credit reports. They can have a reset date and start this whole statute of limitations period over again. So be very careful. That goes for every state. So be careful about that. Now, each state has their own statute of limitations for a debt, regardless of where the bank is that gave you the money, or the payday loan, or the credit card company, or the auto loan company. If they have not made any contact with you, that means that they haven't gotten a judgment against you. So this is not if they got a judgment. This is if you just have a loan with them and they send you a letter and it's older, you know that it's an old debt, and it could potentially be past the statute of limitations. The first thing you need to do is look it up for your state to see if it's past the statute of limitations. In my state of Wisconsin, we have a 6-year for contracts. 6 years. That means that within that 6 years, they did not take you to court and get a judgment, and you have not reauthorized it by making a payment. There are a lot of people in that situation. We can see here there's millions of dollars. This is probably getting close to $1 billion worth of bad debt. So if you have not passed the line on any of those or not reauthorized it, when you get a letter in the mail, rather than talking about the debt from an aspect of you owing the debt or not owing the debt, you need to just go straight into that this debt is not valid due to the statute of limitations in your state. That's all you have to say in there, and then see what comes back to them. You should also send that certified mail, because you want to make sure that it's on record that they did receive it. 99.9% of the time out of 10, they're gonna leave you alone, but you need to keep that letter, response letter that they send you, saying that they are not going to come after you for that debt anymore. The next thing is, if you are getting garnished for any debt that you receive, well, let's back up. So we first went with statute of limitations. Next thing that we want to do is we want to go with the debt validation. So if you get this in the mail, a debt invoice in the mail saying that you owe a debt, you need to, if it is past statute of limitations, if it's not past statute of limitations, then the next step you need to do is to validate the debt. That's where you request whoever owns the debt now. You need to find out if they own it or if they're just collecting it for the original creditor. You need to find out everything. So you need to ask for a full validation of the debt. In that, you can still request the statute of limitations also, but you want them to send you everything about those debts to make sure that they, number one, have a right to collect it legally, and just to make sure that they have all of the information. The things that we validate when it comes to debt is that we want to make sure that they get all of the original contracts, make sure that everything was signed. When it comes to repos, you want to make sure that you get the auction statement, things like that. You want to make sure that they give you everything, such as even charges on the credit card. If they're saying that you charge $10,000, you have a right to get every charge showing that you had a signature on those. They have to maintain those records. So when you do a validation, depending on what type of debt it is, you can request those documents. The next thing we're going to talk about is if, and this could happen if you do a validation the right way, even if it's not past statute of limitations, you can end up having it to where, one of my guys came here, where it could end up being being forgiven. This happened with a client that owed over $32,000 to Citibank on a credit card, but when we did the debt validation and they couldn't provide all of the information that we wanted to have sent to us, they ended up doing a 1099-C debt forgiveness, which is where they're going to forgive the debt, send it to the IRS, and say that the IRS should consider this as income to that individual because they did get to use the card and they used the money of the credit card company, and the credit card company is going to consider it a full loss and not be able to come after it anymore by filing a 1099-C to the IRS. Good thing, the debt does go away. Bad thing, they do put that on as income. So that will be listed as income to that on that individual's IRS forms. They're going to be wanting to see that is put in as income on top of what he had claimed as income from his employment. So the next thing we're going to talk about is garnishment. If you're getting garnished, what you need to do is you need to, and this is what we're doing, is we're going step by step. If they've passed all of these tests and you're getting garnished, the next thing you need to do is you need to look at the laws in your state for garnishment. A lot of people don't know this, but you have to make a certain amount of income to be able to be garnished. And every state is different, so you need to look up the laws for your state. But if you find that you're under, they usually call it poverty guidelines, even though you may not be in poverty, they consider it a poverty guideline, and each state is different. And so you need to get that. You can simply look it up online, and you can see if you qualify to be garnished for the depending on your dependents and the amount of money that you make. Some of them look at how much you make weekly. Some of them look at how much you make bi-weekly. So you're gonna have to look at the laws in your state to find that out. The next thing is, if that does pass and you are able to be garnished, then what you can do is you can submit to the attorney that's handling the garnishment a hardship to see if you can get that adjusted. So you can do hardships even if you're still working with the original creditor. You can ask to talk to their hardship department and get things negotiated to where maybe some payments can get pushed on the back end, and you might have a 3 or 6 month relief where you don't have to pay any payments, and that'll give you time to get caught up with your other bills. Or you can they can lower the payment. It just, every creditor has different options. The next thing is debt settlement. If you owe a debt, and then what you could do is you could contact the debt collector or the original creditor and offer them a lump sum settlement to settle the debt it paid in full. And this is a great option if you have money to be able to do it. And one way that you can achieve it is if you make a plan and you get a hardship deferment with all of your creditors, and then you use that money to pay off settlements on your smaller ones, and then you're able to continue making payments on your larger accounts. That's one strategy that you can use to be able to come up with money to pay off smaller debts that you have. So if you have any questions, or you have any comments, place them below. I'll answer them as soon as I can. This is Stephen Williams with thecreditrepairshop.com. Thank you.